Well, good morning and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. I'm truly excited today. We have a wonderful guest to introduce to everyone out there in this audience that's watching today. It's a very passionate topic of ours. We spent a lot of topic about ESG. We'll explain what that is. But before we get into that, we brought Katherine Collins from Putnam. She manages millions and billions of dollars through her career. She's a 30-plus year career, and she is one of the best, if not one of the best in the industry as it relates to sustainable investing. So, Katherine, welcome and thank you for joining us today.
Thanks. I'm so thrilled to be with you. My favorite set of topics.
Yeah, well, if you look at your resume, and I'm going to put you on the spot, I'm going to ask you to sort of go through sort of your background for our audience today, and then ultimately the discipline of how you think about professionally managing money for institutions and professionally.
Sure. Well, I'll tell you a little about my background. In some ways, it's very conventional, and yet it did have some creative twists and turns along the way. I had a very long first chapter of my career, 18 years at Fidelity. I was an analyst there. I was portfolio manager for some large growth funds, and I ran the whole research team for the equity group at Fidelity for a long time. I left Fidelity in 2007 because my interest in sustainability issues was growing and growing. And at that time, it still was pretty rare to find, deep investment relevant sustainability work happening at major financial firms. And so I wanted to go out and explore for myself and kind of get to the roots of sustainability. So I spent almost 10 years in a more independent perch. I had my own research firm during this time called Honeybee Capital. I earned a master's degree in divinity at Harvard Divinity School. I wrote a book. I studied biology and the field of biomimicry, all with the goal of getting to the real essence of what is it that constitutes a resilient, sustainable set of products, set of processes, organizations, et cetera. And so now at Putnam, it's the greatest third chapter ever. I get to combine all of that into my role as our first head of sustainable investing. So my day is spent on three main priorities. One is helping the whole research team at Putnam become more fluent in the relevant issues for each of our investment contexts. The second is managing our dedicated sustainable investment products, which I'm sure we'll talk about with my colleague Stephanie Dobson. And then the third is helping the broader field to continue to advance and progress. There's a lot happening in this field right now, and we do think that being a proactive contributor and collaborator is really essential.
Let's go back to the basics. For the audience, because if you started with the beginning of this year and as well as what we've seen in terms of ESG, that in the investment world is just changing everything. Everything we see, you want sustainable, you want socially and environmentally conscious companies that we want to think about, as well as government in their role as this plays. Can you sort of break down the E, the S, and the G, and sort of how you guys take that approach, what you think about?
Yeah, sure. I'll try not to get too jargony. Like any field that's developing quickly, we've sort of invented our own language, and it's not really necessary. So the core elements you mentioned, E, S, and G, environmental, social, and governance, is the main acronym that's used in the field. And in some ways, the premise is a very common sense premise. It's the idea that for any given company or any given type of business, or any given investment decision, there's a series of issues that fall into these categories, environmental, social, and governance, that are really important to long-term success. And so if you're going to be a thoughtful investor in any context, the premise is you should be as fluent and in-depth in your understanding of these issues as anything else. The practice of ESG investing is complex, and there are a lot of different ways to go about it. So there is a huge variety in terms of products that are available, investment practices that relate to those products. But at its essence, the goal of considering ESG factors is to have that more complete view, which is something really any investor is always striving to have in the first place.
That's interesting. And I love how you say, because this is what we try to do, especially for our clients, retail clients here at Blanke Schein Wealth Management, is ultimately give me the take-home point, and why does this matter? Why should it matter? And why should I commit some capital to it going forward? Because while we want to save the world and the environment, and that's very mindful, oftentimes in the investment world, at least for, not the recent history, but for, 20, 30 years, you've always had to sort of give and a get. You had to sacrifice sort of the performance component to then do, do right by, investing in line with your values, your personal values. That's not the case anymore. Why is that? Because most companies are now sort of taking the oath, a pledge, or literally transforming from within, regardless of sort of investor sort of activism or behavior, or even just calling for it. It's a welcome approach that you're probably seeing more and more companies these days that are changing and conforming to more of a mindful way of just managing their business. So it must be easier to find those businesses that are going to outperform as well, providing alpha under this category. Tell us a little bit about that.
Yeah, I'm so glad you phrased the questions that way, because this is the heart of the fundamental shift that we've seen in recent years when it comes to sustainability. Not only sustainable investing, but sustainable business more broadly. The conversation has shifted from looking at a very narrow set of things that often were categorized just as a cost. So that either or kind of mindset that you mentioned is very applicable. As the work has progressed and the issues have progressed, we're seeing more and more circumstances where instead of either or, it's and. And in fact, our process at Putnam is very explicitly focused on finding companies where excellence in sustainability, whether it's in their actual products or in how they're running the company, is making the company stronger. It's not just that they happen to coincide or that they're able to juggle a multiple set of priorities at once. It's that one is actually strengthening the other. Again, this is a really important shift, not just in mindset, but in reality. So I'm thinking, these last few months, they've been such an unwelcome test in so many ways with lots of different suffering and crisis points all around. But if you look at the companies that are succeeding and the investment products that are succeeding, they're the ones that really tried to plan ahead for resilience under turbulent circumstances. So in some cases, there are big companies who have really invested in their own employee base and the flexibility around different management priorities. That has really stood them in good stead. We have companies that have really paid attention to investing in the well-being and mental health of their employees that is really turning out to be a huge asset in a time like this. And then vice versa, we have companies where the actual products they're creating are even more valuable in this set of circumstances. Everything from technological solutions to healthcare solutions to different ways to access markets and information. So you see, again, in a time of tumult, conditions we really wouldn't wish for, this premise and theory that these are high ROI internal investments to make at a corporate level is really shining through.
That's great. When we go do our due diligence in Blanke Schein Wealth Management, we do our search and selection, and we came across your investment management style and sort of just track record. We were very impressed, and that's why once again we're on this call today. But Katherine, you just hit on a couple of points that I want to go back to. One, under the category of alpha, right, generating excess return over this sort of the benchmark, if you will, and under the ESG umbrella, which is your discipline, let's talk about leadership. You talked about board leadership. How is that changing, and what do you guys look for in board leadership as it relates to sort of marrying the two under your discipline?
Yeah, so board leadership is a really fun topic to dig into. And again, everything we do at Putnam links to the heritage of the firm overall. So we have this legacy of deep fundamental research, true active management. So it makes sense that our approach to sustainable investing is exactly that. It's extending that capability even further. And I would say that's something, if you're interested more broadly in the field, you want to look for that in every circumstance. If you have a great quant manager, they should be doing some really cool quant stuff with respect to ESG. If you have a great multi-asset manager, same thing. So I want to emphasize our approach at Putnam is really linked to that fundamental legacy. And this question of governance is important always to a long-term active investor. What is more important than long-term allocation of capital, both internally and externally at a company? That really, in many ways, determines the fate of your long-term investment. So then the next natural question is, well, who's making those decisions? And is it the right group of folks kind of gathered together? Do you have information that's as complete as possible? Do you have a series of processes and culture within the board that, asks the harder questions and has real vigorous dialogue and debate as opposed to, kind of rubber stamping. These are hard things to assess from the outside since we're not sitting there in the boardroom in most circumstances. So one marker that we look at is board diversity, and you can measure diversity across all different dimensions. The most powerful proof point for diversity is that we know having cognitive diversity in any decision-making group is especially valuable in circumstances where the underlying backdrop is changing or it's a really complex set of considerations before you. And so I can't think of any more pressing example of that than the times we're navigating through right now. When we look at board diversity, we don't always have markers on every particular dimension of diversity, but we do have markers for gender diversity. And so some of our early work at Putnam focused on the proportion of women represented on corporate boards. There's a long list of academic papers that show a correlation, not necessarily causation, but a correlation between higher board diversity and higher returns over time, better business characteristics. So it's inherently an intriguing point to go with the cognitive diversity observation. And the specific measure we looked at might not be familiar to folks. This is a little in the weeds, but it's kind of cool, and it's a great example of, why getting a few layers under the surface is valuable. Just counting women is very important, but not inherently a very satisfying analytical exercise. What we found is that there's a lot of literature that shows when a group gets to 30% in terms of its overall composition within a larger whole, that's when the benefits of diversity really start to accelerate. It's when the inputs from that group can be more fully incorporated into decision making. So one set of analytics we looked at a portfolio level is what proportion of our companies are at or above that 30% level for women represented on the board. In and of itself, this is one piece of a much bigger, more interesting set of questions, but it's a neat clue as to how a company is thinking about diversity and how diversity is maybe starting to inform some of those really important long-term strategic decisions.
Great. That was a great insight, and yeah, the empirical evidence is out there in our investment world as we sift through that. And as a father of 4 children, I often joke that my son and I are minorities in a sorority because we have 3 high school teenage girls, my wife and I. So 4 children, 3 girls and 1 boy. And so the leadership and, the future, obviously sustainability is very important to my wife and I and our family, but as well as future women leaders, going forward. And that is something that on my kitchen table, personally, I have that conversation on a daily basis, because I would love for one of my daughters to be, look up to somebody just like you, and someday, be following in your footsteps in the world of wealth management would just be wonderful. So I commend you on this and your entire team, very specifically on that. And as you know, I have the Society of the Few Financially Empowered Women, and we also have our conference, right? Confidence, Women, Wealth, and Wellness. So we're very passionate here about that, both personally as well as professionally here at Blanke Schein Wealth Management. But I will tell you, and through the years of my sort of sitting across the table from clients and looking at those companies, very specific, the research, but yet the empirical evidence is there. At least past performance has shown that, women that are in leadership board level or even management level at any given sort of company across sort of the S&P 500 and anywhere in between outperform on a lot of different metrics. And it's an indisputable fact. So it's exciting to watch. It's a trend that'll continue. I wholeheartedly believe that, and we're continuing that sort of that trend in our Schein household, specifically doing our best, hopefully.
Well, I like when it comes home in a very vivid way. It makes it a much more personal and matter-of-fact discussion. And I think, this is something that's so important in other dimensions of diversity as well. And so I want to make sure we put this in a
Right.
bigger frame. We have more information on gender diversity because it's been tracked and disclosed in a more complete basis. But everything we just said in terms of the power of having that more complete set of inputs is true across all different dimensions of diversity. And so
That's great.
We're really excited to see this trend extend.
That's great. That's wonderful. Well, why don't we talk about, if we could pivot just for a moment, on sort of your 2 different disciplines, and tell me a little bit more about your team and how you guys think about managing clients' investments.
Yeah, so first I'll tell you a little bit about the team. The most important thing about our team is it's called the Sustainable Investing Team because that's exactly what it is. It's a team of investors, and that might sound like a silly thing to point out, but I mention it because in a lot of organizations, the team that's responsible for sustainability analysis or ESG data sits near the investment team, but they're not actually making investment decisions themselves. I really commend the team at Putnam before I even joined, and they were crafting this role that I now hold. The one true North Star that had been clearly identified from our own leadership team is that if they were going to go in this direction, they wanted it to be a core fundamental investment function. And so, as you can tell from the conversation already, that informs everything that we do. So as I mentioned, Stephanie Dobson and I run the Putnam Sustainable Leaders and Putnam Sustainable Future portfolio together. We have 3 different researchers dedicated to our team, a combination of fundamental and quantitative expertise. Shep Perkins, who's our CIO, also sits on our team. And then we have operational support from 2 other team members. So it's a really great full-fledged team, but we sit within the broader equity team at Putnam, and we really rely on them day in and day out. We're constantly kind of cross-pollinating research and investment ideas. So it's important for everyone to know we're not a satellite off in the corner. We're not an island unto ourselves. We're really part of the core investment approach at Putnam.
Let's go back to sort of a question that you might debate internally and with your team as it relates to, the rubber stamp. Because if we're in the world of ESG, we're looking for all those managers. Some of the funds inside, or even the indices, are getting sort of, I don't want to say fooled, but they're not letting sort of their due diligence truly play out in sort of I would just say an honest approach of terms of, some companies are saying, oh gosh, I'm going to be green by 2050, and you should put me in the portfolio now. I mean, there's a lot of those companies right now that are making the 100-year pledge to be green. Well, I have news for you. Everything on this planet's going to be green in like 50 to 100 years. So that's kind of like, that's kind of like you can't do that just so maybe some investment managers can pick you up and your company that you're leading, it makes you feel good about yourself, in terms of how you guys are going about the future. It's literally, what are you doing today that you're not sort of gaming the system as a company, and sort of what are those internal conversations? How do you guys screen for that to ultimately find out and weed out the bad actors? Because there is that game of Wall Street, you know what I'm talking about, and there's that sort of inherent because it is a hot topic, everyone wants to say, oh, we are. Well, then eventually, technically, the entire S&P 500 is green, right? By a CEO just saying, oh, we're going to make that pledge. So there's kind of like hold on, that's why we have somebody like you and your team to vet this, because we truly want to be in that discipline, and we want to know what's inside and those that are actually managing the companies responsibly according to the way they should be. You want to give us some insight into that?
It's such a big issue that you raise, and it's one of the most essential ones for the field. First, I would just reflect most of what I see, both in terms of different investment products and in terms of corporate activity. It's pretty sincere. So there's always a little bit of communications, put your best foot forward element. But where I think you can really add a lot of value, especially as an active manager, is in matching what's being said and done on the sustainability front with the core business at hand and the strategy of that business. It's important to note there are a lot of different functions that are being attached to the ESG label right now. Some of them are compliance functions. You want to meet a certain set of protocols. There are a lot of different plans out of the EU that have very strict guidelines for what constitutes a sustainable investment and what doesn't. And so there's a really important element of, are you checking the box in a good way? Are you doing all the right things? Do you have all the processes and procedures, that a well-run company should have at this point? I kind of think of that as the floor. And you're right, there is widespread activity here. It's increasingly accelerating and better documented. So I do think the floor is rising, and that's a great thing. We should all cheer it on for sure. But that's different than the other functions that are maybe more interesting from an investment perspective that are also linked to ESG. One is risk mitigation. Are you really thinking ahead on the things that could make or break your company in the long term? A lot of environmental considerations have a link to direct risk mitigation. And then the one that's most exciting to us, but probably has the least activity so far, is alpha. If you do this well, it really can be additive, and additive in terms of your long-term financial outlook, and also additive in terms of the benefits that your own operations and products and services are providing, kind of rippling out into the world. I mean, that's what a good business at its heart is hopefully always doing, producing something that's of real value in the world. And so I think sometimes when we get caught up in the internal critique within the field, which happens quite a lot, it's because we're looking to serve these different functions, and instead we're kind of lumping them all under the same umbrella. So we are very, very proudly and specifically with our equity offerings focusing on not just the floor of compliance, which is necessary, but not really sufficient. We're looking at the sky, like what is possible here that would really generate terrific returns and terrific sustainability and impact over time. And other products and other teams, and even internally at companies, sometimes the priorities are not that. Sometimes they're satisfying a different set of questions.
Great, thank you for that that answer, because and just giving us sort of that insight as to sort of, the way I feel about the world. I get frustrated sometimes because you see, everyday headlines or everyday Wall Street Journal, and it's good to see that, and I actually do believe that fact that your industry specifically and those sort of companies, there's a lot more sincerity out there. There is this change, and I'll tell you one thing: if you're not going to be part of the movement, you're going to be left behind.
Yeah,
we're seeing that all over. I will tell you, 20 plus years ago, when I was crafting investment policy statements for very specific institutions and nonprofits and foundations that have very specific sort of value-based investing, that conversation 20 years ago, and you'll know exactly what I'm talking about after I say this, we always had to do the yeah, but. You want to take out tobacco and firearms, and we can invest in that, but you're going to give up performance as a result, just so we're clear on this investment committee. Are we okay with that? I mean, I have had to walk many investment committees through that conversation, and it always is a stalemate where half the room's like, well, we've got this fiduciary duty to have sort of, beat a benchmark. In this case, it'd be S&P 500. But if you carve that out, you immediately handicap the performance of the portfolio. And again, that was 20 plus years ago when I was helping sort of foundations work through their investment policy statements and craft that. Today, it's a very different conversation. And you just brought that up, which is, and you get excited, I get excited, because you don't have to invest in this sort of vertical, if you will, or this field, and give up alpha, which is that excess return or beating benchmarks, if you will, simply because so many companies are embracing that, and there's so many more opportunities. And those companies that are actually embracing that in a great way are doing even better, right? So
it's true, yeah. And you're right. I mean, the observation you made from 20 years ago is totally accurate. And to be fair, that was the tool that was available to us as investors at that time. Even now, I see a lot of critiques that are sort of anchored on, 1990 practice, and there's not really recognition about, there's much more data to work with now. It's not complete. There's a long way to go. But analytically and empirically, this is what frustrated me the whole first half of my career, knowing there were such important issues here and having not much to work with to investigate them. Now, if you're into really interesting and important research questions, this is a dream come true. It is a sea of opportunity in terms of understanding. And I really am sincerely encouraged when we talk to company leadership teams about the recognition at that level too. In most cases now, sustainability and strategy are the same conversation. This isn't, something that the marketing team puts out after the fact. It's really integrated more and more deeply. And that's hopeful for the whole world.
Yeah, the world's changed. I'm going to grab something here. I don't have it here. It's I have it in my bookshelf here. It's my Wharton Business School Investment Consulting Designation, and it's a binder this thick, right? You have to pass and do all this fun stuff, and it's wonderful because we got to see the likes of Jeremy Siegel and everyone else. But we spent a half a day. When you spend your time there, you spend a half a day sort of talking about. And there's a chapter in that book that I would show you that talks about, back then it was RSI, right? And it was it was the giving up what you could get in return for, but that conversation has changed completely now, and it's refreshing, and it's really great to see alpha in the world of ESG going forward. So that's wonderful. Katherine, what else would you like our audience to know about that we may not have covered, I may not have asked at this moment?
You know, I think we touched on most of the key things. You know, the idea that increasingly environmental social governance issues are relevant for businesses. There really is a lot of importance in the nuance. You know, the things you investigate for a software company probably should look a little different than the things you investigate for an industrial company. And so having that context-specific, you know, research-intensive approach from our perspective is a really necessary thing. Again, it's a researcher's dream come true if you're looking to have some kind of added insight to add into the soup, you know, of your fundamental research process. This is a great way to do it. And I'm so glad you touched on the either or element. It's true in the businesses we're investing in, but it's also true in the investment process. You know, instead of feeling like this is a push and a pull within the investment process, this is an added set of ingredients that extends our fundamental work in a really positive way. And again, that's different fundamentally than it was 10, 20 years ago. So really big shift, and the approaches that are possible because of that shift are really exciting. So we're proud of what we'd started the last few years at Putnam, and we're even more excited to build on that for the very long term.
Well, Katherine, I think we've got a lot for our audience today. I truly want to invite you back at any point in time in the future. We're going to continue this conversation, this dialogue. We'll receive some questions maybe from some clients and set something up for the future that we didn't cover today, because I definitely want to be respectful of your time. And I appreciate this opportunity. Again, the take-home point here is ultimately you've got impact companies, you have active strategy, and you have a veteran leadership team. That's what we like most about you and your team at Blanke Schein Wealth Management. And you have multiple disciplines that are ultimately setting us up for success in this world. As we know, it's growing too. The ESG world is growing tremendously. So Katherine, I want to say thank you for your time today, and thank you for joining us here at Blanke Schein Wealth Management.
Absolutely. Thrilled to be with you. Thank you.
Thanks, guys, and we'll tune in next time. But thanks for joining us today.